Good evening. The Indian markets ended on a flat note at the end of a lackluster trading session as investors turned cautious ahead of a crucial week for debt-plagued Eurozone. The government's flip-flop on the FDI and retail issue also dampened the mood slightly, with retail stocks particularly taking a hit in today's trade. Markets traded with a negative bias throughout the day. The NSE Nifty recovered after hitting an intraday low of 5,002. It managed to hold on to the crucial 5,000 level even as the India VIX jumped by over 4%. The BSE Metals, Consumer Durables, FMCG and Realty indices were among the major laggards. BSE Power, Capital Goods and PSU indices were among the notable gainers today. The BSE Mid Cap and the Small Cap indices finished nearly unchanged. The advanced decline ratio was slightly negative and the trading volume was dead low ahead of the tomorrow's public holiday and the important European Union summit on Friday. The BSE Sensex lost 41 points to close at 16,805 and the NSE Nifty lost 11 points to close at 5,039. Retail stocks fell due to reports that the centre has put the proposed opening of retail to FDI at halt. The parliament, which has been paralysed during the ongoing winter session, will resume on Wednesday. It is likely to be a stormy affair yet again. There was buzz of a possible cut in CRR by the RBI due to tight liquidity ahead of the advanced tax outflows. The central bank is unlikely to oblige before its policy meet in the middle of this month. Globally, though US seems to be okay, the focus this week will be on the Europe as lots of important developments are lined up. The biggest of them will be the European Union summit on December 9. In global action, barring China, Singapore and Taiwan, most other Asian markets finished higher due to optimism that European leaders will finally be able to set aside political differences and thresh out a comprehensive plan to address the region's credit crisis. US stock markets futures were pointing to a higher opening, tracking similar gains for the European stock markets. European stock benchmarks rose today as Italy's government adopted new austerity measures and as investors awaited the outcome of meeting between the German and French leaders. Italian government bonds advanced today, pulling the 10-year yield down under 6%. Bank shares were among the top gainers in Europe due to growing hope that European leaders will accept a proposal for a more closer fiscal integration among Eurozone nations at a Brussels summit on Friday. Domestically, India's service sector bounced back in November, expanding for the first time in 2 months as new business jumped despite stubborn inflation, high interest rate and a global slowdown. The business activity index stood at 53.2 in November from 49.1 in October. Any reading above the 50 mark implies growth. In September, the index had contracted for the first time in more than 2 years to 49.8. US stocks finished flat on Friday after the government reported that the world's largest economy created 120,000 jobs in November and the unemployment rate fell to 8.6%. The Dow Jones Industrial Average recorded its best point performance in 3 years. Most equity markets in the world surged last week after the top central banks moved to ease tension in European money markets and China surprised with a cut in reserve ratios. Thank you. Wish you have a great evening ahead.